Now, growing a trading account doesn't mean that a trader is not making any mistakes. But these 3 mistakes definitely will stop the growth of a trading account. These 3 price action mistakes one must avoid to consistently grow their trading account. So in this video, I'm gonna show you today what are the 3 devastating price action mistakes one must avoid to be profitable as a trader. I'm gonna show you the real chart example, so make sure that you stick till the end of this video so that you understand and you see that if you are making the same mistake so that you can avoid them to facilitate fast growth of your trading account. Now before I begin this important lesson, make sure that you smash the like button and also hit that subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. Without further delay, let's get started. Okay, so the first mistakes one must avoid is selling from the top, buying from the bottom. Now this is the most common mistakes that everyone makes, especially in the beginning. Retail trader tend to sell from the top, buy from the bottom, but always it is the other way around. Either I don't buy from the top nor sell from the top. They said that buy from higher high, sell from lower low, which is partially true. I normally buy from the local breakdown and sell from a local breakout. So let's see what do I mean by this in the chart. Let's see this gold chart as an example. This is 1 hour chart on gold. Now if we look at this market, what do you see? That I'm replaying the chart to clarify you. Now you can see that this market is in an uptrend, clear uptrend. There is an impulse correction, deeper liquidity gap, and the market is forming series of higher high and higher low. Now as a retail trader, there is always a tendency comes in play, thinking that okay, this market here, it is a double top, okay, and there is a chance for the price to drop and I'm gonna sell. This is a mistake that many retail trader does, is trying to sell from the top, trying to find a double top or a head and shoulder, instead thinking about the trend. Now you can see that afterwards what the market did, in fact the market dropped, but it didn't drop the way that you can make profit from the market. You can see that with that double top formation, the price has dropped very little, that you cannot keep a high risk to reward ratio. Instead, what you saw that when the market got rejected from this support, there is a big move that you can count, and that is why the most important mistake that one must avoid is tendency to sell from the top. Neither I buy from the top. The reason is, you can see if you sell from the top also, it is not a very good trade. Either if you buy from the top also, there is a, you are trading against the trend. So the best place is for the way to wait for the price to have a local breakdown. This is what I always teaching day in day out in Forex Trading Wizard Academy, to find a local breakdown. So let's look at that point. How do you identify a local breakdown? Now to identify a local breakdown, one must first identify the trend, swing high, swing low. Let's imagine that a market is trending, okay, creating series of higher high and higher low, which is an uptrending market structure. Once you identify that uptrending market structure, the next step is for the market wait for the break of structure. When you see that break of structure, you know that this market has broken out of that structure anytime the market take a leap to the major direction of the trend. This is the key points here. Now as you can see on gold, in that market, when it has broken out of that structure, we saw that there has been a huge movement happen in the major direction of the trend. Now let's quickly look at some more example of what we are talking about. Now as you can see, this is also the same situation when you see that this market has created this impulse followed by correction. Now in that correction, there is always a tendency come here for potential sell. Now here is the mistake. Majority of the trader will think that okay, there is a double top formation, the price has formed a bearish engulfer crossing all this high, so there is a liquidity in it, and also double top with a lower high, let's sell. That's the mistake that majority of the traders make, because the major trend in this market is up. If you consider from here, you can see that this market creating series of higher high and higher low, which is a clean uptrending market. So in that uptrending market, always best idea to buy instead of selling after a local breakdown. Okay, the second price action mistakes one must avoid is just jumping on a buy or sell as soon as there is a break of structure. What do I mean by this? Let's assume that again gold market in this 1 hour chart. What do we see? That this market is nicely trending. If you draw this market structure, you can see that it is maintaining series of higher high and higher low up to this point. Okay, now afterwards what we saw, a break of structure. Now when we see the market has broken this dynamic trend line, this 20 EMA is acting as a dynamic support. As you can see, as soon as this structure is broken, there is a tendency to jump on a sell, that okay, the market has broken out of the structure, it is going to change the trend because it has broken the structure, let's sell. That's the mistake, because any time the market breaks the structure, chances that it's gonna gain momentum, and we could see that this market again going back to its original direction of the trend. This is the key points that one must understand when you are trading. Always look for the major direction of the trend. Now as you can see, if someone sell here from this candle, from this doji, or from this pin bar after this liquidity grab, it didn't move much, a little bit movement, and then the market aggressively has gone back towards its original direction. So this is why it is important that when you are looking at the market, not the break of structure for selling, but in an uptrend, when you see the market has broken the structure, it is a point where you look for buying, because when it breaks the structure in the first go, very little chance that this market will change its trend and continue to drop. The market, a trend is not built in one day, it's not gonna end in one day. So it is always a good idea to wait for a break of structure and then looking to trade based on the price action in the direction of the major trend. So third mistakes that one must avoid is trading the pattern, not the trend. This is also a very common tendency, especially in the beginning, to look for a double top, double bottom, head and shoulder, instead of thinking where this head and shoulder has been formed, which way is the major direction of the trend. So what do I mean by this? Let me show you a couple of examples to understand What do I mean by this? Now look at this. Let's see this also on gold. Now as you can see here in this chart example, gold has formed a clean head and shoulder. Okay, so this is a recent chart. As you can see, from this level the market has come down, has created this move, has dropped, and again has formed a 1 hour bearish engulfer, forming a clean head, left shoulder and right shoulder. This is a very clear reversal pattern. But what gold has done, as you can see, after forming that head and shoulder, the market just has reversed completely the other way around. Okay, so you will see this over and over in the market. So the market did not respect that head and shoulder. It has respected the major direction of the trend. So this is why it is most important that not to trade the head and shoulder, but to trade the major direction of the trend. Now head and shoulder is very crucial when it formed in the direction of the trend. Let me show you an example of head and shoulder, double top, double bottom, when it formed in the direction of the trend. Now look at this also in this zone on the chart. What do you see in that area is that the market is trending, creating series of higher high and higher low, which is an uptrending market structure. Now in that uptrend, what gold has done, it has formed an inverted head and shoulder, and with that inverted head and shoulder, the market clearly has broken out of that structure, confirming a very nice looking reversal from this zone. So this is why it is important that one must trade not the pattern but the trend. Now these are the 3 mistakes that a trader must avoid to consistently grow their trading account. I strongly believe that, guys, you found value in this important lesson. If you find value, make sure that you leave a like and also subscribe to the channel. And also, if you want to know more about the trading strategy that I am trading and also trade with me every day in Forex Trading Wizard Academy, also you can join us. Link below this video in the description area. Thank you, and I'll see you soon in my next lesson.